What's up, guys? So in today's video, we're going to talk about Uber stock. So Uber stock is up pretty big after releasing their earnings reports. And I was kind of digging through, some of the other videos on YouTube and some of the conversations on Yahoo Finance and stuff. And everyone seems to not really understand why Uber stock is going up. So we're going to basically explain this in the video, why Uber stock has been increasing. So before I get into all of that, guys, I want to quickly go over this latest earnings report because I think there are a lot of key details in here that people might have missed, which will kind of make it a little bit more difficult to understand why this stock is going up so much. So you can find this information. You simply go to uber.com and go to their investor relations. So here it says revenue of $3.5 billion, growing 14% year over year. So a couple of the key so a couple of the key financial highlights include gross bookings grew up to 15.8 billion and revenue was 14% year over year. Now adjusted net revenue, that's revenue after they paid their drivers and things like that, is growing 18% as well. So basically that's in line as well. And so now everyone's talking about how could a company lose $2.9 billion and have the stock price go up. Well, guys, if you read into it a little bit more, they didn't really explain it so well in some of the other news sites. They're very vague about it. But if you read this report, we can go up a lot more in depth on it. So as you can see here, those $2.9 billion in losses were 277 million with stock-based compensation expense and pre-tax impairment write-downs of 2.1 billion. So what are those write downs? Well, write downs are simply when Uber has basically reduced the value of an asset that they held, and that asset is Didi. So what is Didi, guys? Well, I'm going to show you exactly what. Okay, so I kind of want to just jump to that part of the earnings report, and then I want to explain to you guys what Didi is. So as you can see here, it says during the 3 months ended March 31st, 2020, recorded an impairment write-down of 1.9 billion, primarily related to our investment in Didi and the credit loss allowance recorded on our investment in Grab. So basically, these write-downs are basically reduction in the value of their assets in these two companies, Didi and Grab. So let's quickly go over them, and then let's get right back. Okay, so I'm not going to go too much in depth, but Didi is a big ride-sharing company in China. So that's where the majority of those losses had come from. A simple write-down, guys. These weren't actual losses from Uber's operations or Uber Eats or Uber Rides or anything like that. It was a write-down, a decline in the value of their stake in Didi, which could be a short-term thing because obviously a lot of ride-sharing companies have been hit. But as long as Uber holds on to that stake, I expect this stake in Didi to be worth a lot more in 5 to 10 years from now, guys. So these are kind of losses that are basically due to the whole kind of coronavirus situation going on. And then the second company mentioned in that report is Grab. So Grab is another ride-sharing company that's very popular in Southeast Asia, guys. So I think maybe a lot of people weren't really exactly clear on how the write-downs and how Uber attributed those losses, but the majority of those losses were attributed to write-downs, not exactly losses in Uber itself. So if you kind of take away the 277 million stock-based compensation and the 2.1 billion write-downs, that means that Uber itself, as a company like Uber Eats and things like that, really only lost a couple $100 million, which really isn't that bad, guys. So as you can see here, adjusted EBITDA was, lost. Was down $612 million. So Uber is still has so many expenses and things like that, and the company is trying to get profitable in 2021, and they are simply just spending too much money. So I think Uber is a company that should be run probably more lightweight. It's an excellent company, guys, and I think long term that it's going to be $1 trillion company because I just continue to see more and more great things. So I'm going to quickly read this from the CEO. He says, while our rides business has been hit hard by the ongoing pandemic, we have taken quick action to preserve the strength of our balance sheet, focus additional resources on Uber Eats, and prepare us for any recovery scenario. It says, along with the surge in food delivery, we are encouraged by the early signs we are seeing in markets that are beginning to open back up. Our global footprint, highly variable cost structure, remain an important advantage as our expectation that the ride's recovery will vary city by city. So, guys, if we take a look at some of these numbers, there's a couple numbers that I'm looking at when I'm looking at Uber's earnings report. I'm basically looking for monthly active platform consumers, trips, and revenue. Now, I know that they're going to figure things out when it comes to being profitable. They just simply have too much overhead, too much staff, too many expenses. So that's why this company is losing money. They basically hired a ton of people to grow really, really fast, and that's exactly what they've done. So now it's time to trim the fat. But what is also awesome about this company is that they just eclipsed 100 million monthly active consumers in Q1 2020. That's a huge milestone, I think, for any company. And of course, we're going to see a lot of those numbers dip down in Q2. But this company to have 100 million people using your product is rare. So I think there's only a handful of companies I can really think that have that many monthly active users that aren't really like a social networking site or something like that. Of course, you've got Amazon has a ton of subscribers. Netflix has a ton of users and things like that. So these aren't actually subscribers where they pay money every month, but the fact that over 100 million people on this planet are using their platform definitely gets my attention and makes me value this company even more. So as we continue going down, I wanted to talk a little bit more about these numbers here. Now, this is what I was really anticipating in the first place. I knew that the ride segment was going to get hit, but the fact that Eats is up 52% year over year in Q1 is amazing, guys. And also the freight as well has increased 55% as well. So Uber is a little bit different from Lyft. I'm going to make a video comparing the two, but Lyft does not do only does rides. So Lyft is not involved in food delivery and they're not involved in delivering packages and things like that. They're solely focused on rides. So the stock is a little bit different. I want to talk a bit more about that in depth in another video, but I want to just stay focused on Uber right now and just say that there's a lot of opportunity. I think that Uber stock is still grossly undervalued. So the company's been doing a lot of altruistic things like don't like 10 million free rides and deliveries. Guys, that's going to pay itself forward anytime you give out without asking for anything return. You always pays dividends into the future. So that's another great altruistic thing that Uber's done, and a lot of other companies like Microsoft and Amazon and Apple have done similar things. And that's why I consider Uber on that level. I think long term it has the ability to be, and I'm going to continue to hold my stake. It's actually one of my largest stakes right now, and I'm going to continue to hold on to it. So as you can see here, they added some awesome accounts in the Uber Eats segment. They signed up 2,500 locations for Chipotle and Dunkin' Donuts, 4,000 plus locations in Shake Shack. So that you guys, I don't want to go through too much of this stuff because there's a lot of information on here, a lot of great things on this earnings report. So you guys should really take a look at it. But I just think that Uber is headed in the right direction. I think the CEO is excellent. I think people underestimate how difficult it is to run a business like this in a brand new segment, in a brand new sector where 10 years ago it was just unheard of to book a car with your smartphone. So this is all a new industry, guys. There's going to be some bumps and some some mountains to climb along the way. But we're thinking about Uber in the future now. So if you guys want to trade this stock, this probably isn't the best stock to be trading. But if you guys are thinking long term, if the company becomes profitable by 2021, you're going to be in a great position. And then I want to show some good things about the balance sheet, holding over $8 billion in cash and plus short-term investments around 9 billion total, and not too much debt, some debt, but not too much, about a long-term debt of about 5 billion. So, the company will do fine. The only thing I don't like is that they've already racked up about $19 billion in losses over the years, which is not a good sign, but that 100 million plus active users, and that's with a lot of the rides being suspended during the coronavirus. As long as that number continues to increase, I'm going to have faith. I've seen this story before. Most of these high growth, hyper growth companies, they aren't profitable in the beginning, but if they can kind of get on with the self-driving thing and cut down those expenses, then we're going to see some excellent results. So another reason why Uber is losing money, it's kind of hard to show it on this because it's cut off, but as you can see here, they just have so many expenses. So, they're bringing in, 3.5 billion, every quarter, but when they have to pay for marketing and stuff, as you can see here, their total costs and expenses is exceeding revenue. So that's really why the CEO is so adamant about cost cutting, because he understands that if he can cut costs, they can get this company profitable within the next couple quarters. Okay, so let's go back to where I think Uber stock is headed. So just to remind you guys, this company IPO at around $45 a share, something like that, $44, $45 a share, depending on which source you read. And so now the stock is simply down. You'll look here, we can see over the 1 year chart that the stock is down about 23%. So guys, I still think there's a lot of opportunity in Uber. A lot of people are putting way too much. I think they're putting way too much stock into those short-term losses, which a lot of them have been stakes in other companies, because Uber is a little bit different than most companies. They don't try to compete in a market they think they're going to lose at. If they can't be number one in the market, they'll just pull out. So what they've done is instead of just simply trying to get in every country, they're just kind of going with the flow. So for example, with Didi, they figured, well, if I can't beat them, join them. So instead of trying to compete with Didi, they just pulled out, and then they bought stake in Didi. The same thing with Grab. They pulled out of Southeast Asia. They bought a big stake in Grab. So they're basically still the most dominant player in terms of transportation and food delivery in the entire world, whether they're actually doing it on their platform or they're simply owning a stake in these companies that are the market players. So let's be frank, guys. A lot of people that never ordered food in their life online have done it, and we know that people are creatures of habit. So now people see how convenient it is to just sit back, relax, watch TV, do whatever, spend time with your friends and family, and instead of going out, waiting in their car through a drive-through, waiting in line at a restaurant, they can simply just have food delivered to their door. So people are going to regain that habit. And another positive sign of this whole coronavirus situation is a lot of people are going to be very skittish about public transportation. When I used to work downtown in Washington, D.C., I used to be in the metro bus. You're like crammed in there like a sardine. So a lot of people are going to be preferring things like Uber, just so as the social distancing will still continue even after things have been opened back up, where people really want to be crammed next to each other in a train or a bus. Probably not. So I think that's why Uber stock has continued to go up. I think people are just starting to understand that this company is serious and that it's still under IPO price, guys. It just I really been trading publicly that long. So I don't think that it's been trading publicly and it's had enough kind of long-term, time frame, enough charts for us to really say that, oh, it's too expensive. Oh, why is it going up? No, I think it's got value. So for me, I'm going to continue to add shares to my Uber stake. I added a ton of shares. I bought a few at this dip. I wish I had probably just gone all in on it, but that's in hindsight. But the fact is that I think Uber stock can easily reach its IPO price level probably by the end of the year. So my short-term price target would be around $45, because usually on companies like this, we want to fill the gap, and then now we want it to come back up and fill the gap. But if you guys bought down here, congratulations. I think there's a lot of positive signs for Uber in the future, and this is a stock that I made sure I didn't miss. I simply bought it the first day it traded at the IPO, and I've been just averaging down, because I wasn't going to miss this one. I missed Apple, I missed Amazon. I didn't buy it at the IPO. I wasn't thinking long term, but with Uber, I use it myself almost every day, and even with the ride segment kind of being held off, there's still value in that food delivery and stuff like that. And even when I'm walking around, I see people using Uber companies or Uber affiliated companies all the time. So it's ingrained in our society, and I don't think it's going to go away anytime soon. So that's it, guys. Hope you enjoyed this video. So please give me a thumbs up and smash that subscribe button for more videos on Uber and other hyper growth stocks that can make you a lot of money. So that's until next time, guys. Take care.